I think that there is reason to believe that gold will indeed go into the 10,000s. I didn't say this before in an interview that I gave when gold was at 1,200, and I was asked by David Rubenstein, where do you see gold going? And I said my long-term outlook in 2007 was that the first equilibrium level would be between $3,000 to $5,000. If silver convincingly surpasses $50, then there's really just empty space. And, there will be people who will push back on my assessment. And, it doesn't really matter whether I'm right about silver going into triple digits. What I do believe is that if I am right about silver, whether it goes into triple digits or not, the silver equities will go ballistic.
Based on the bullish price action, the targets of $6,000 and $10,000 are not imaginary. The ongoing geopolitical conditions and global trade war could create an economic crisis, which could push gold to those targets. This technical setup presents a compelling case for long-term investors to remain bullish on gold. Billionaire investor Thomas Kaplan calls the current environment a perfect storm for gold, driven by strong macroeconomic tailwinds. Kaplan recalls pivoting from energy to gold in 2007, a move that has since outpaced most major assets. Concurrently, Kaplan believes gold is entering the third wave of a long-term bull market, with potential to reach $10,000. He adds that the gold mining stocks could benefit explosively as the cycle unfolds. Smaller gold producers, such as Greatland Gold and Hochschild Mining, have posted impressive gains in 2025, buoyed by rising gold prices. And if gold continues its upward trajectory amid macroeconomic uncertainty, Fresnillo and its peers could outperform the broader market. Regarding the monetary metal silver, Thomas Kaplan describes it as a dual-natured metal with both industrial and monetary appeal. He believes that if silver breaks past $50, it could accelerate toward triple-digit prices. Despite its volatility, Kaplan expects silver mining equities to outperform. Silver is starting to attract renewed attention as it pushes toward what some chart analysts are calling a once-in-a-generation technical breakout. With the metal now testing the critical $40 mark, major institutions like Bank of America are beginning to suggest that silver could outperform gold in the months ahead. The silver mining sector presents compelling investment opportunities as metal prices strengthen and leading companies execute growth strategies. Market consolidation has reduced available assets, while demand fundamentals remain supportive from both industrial and monetary perspectives. Companies with established operations, strong balance sheets, and growth pipelines appear well-positioned to capitalize on the improving silver market dynamics. Before we dive into Thomas Kaplan's sharp insights from their latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
I think that what we're experiencing is a perfect storm for gold, but I really do want to make sure that people put what's happening today and the various macros that are so supportive, providing tailwinds for gold, within context. So people will talk about real rates, people will talk about the dollar. Let me express it this way. When you look at the long-term cycle in gold, you see that the first wave, let's say from the 1990s that took us to $1,800. For a dozen years, gold went up every single year, regardless of what was going on with interest rates, what was going on with inflation or disinflation during that period, political issues, the dollar, commodities. In 2007, when I sold my energy company, in order to pivot into gold, gold was at about $550, $600 an ounce. The price of oil was around $120. And my belief was that I didn't know any longer whether gold was worth $20 or $120 because of this advent of something called shale. But I did believe that gold would give me everything that I'm looking for as a currency that could not be debased at will. And it did. So we're talking about a moment where dollar euro was 147 where the price of oil was 120. Since that time, the dollar has strengthened against the euro substantially. I don't know where we are today, but let's just say 110, 115. And the price of oil has fallen by half. And yet gold has multiplied fivefold. There's a reason for that. It is the best performing currency in the world. It's the best performing commodity of any size. And regardless of whether there's been inflation or deflation, gold has done absolutely beautifully. Now, I do believe that what we're seeing now is essentially the continuation of the bull market that began, when gold was at around $300 an ounce. And that is to say, wave one took us from 250 to 1800. We had a correction, and now we're embarked upon a third wave. I'm not saying that so much to be referring to technical cycles, but I do believe that this wave has the potential to take us ultimately over the coming years to where the Dow is in terms of the numbers. Well, it sounds outrageous, but if somebody had said when the Dow broke out in 1980 over 1,000, or look back to 1987, 1988, when the Dow was only at a few thousand, and if somebody had said the move isn't over, the move is just beginning. And I believe that we are in an era where gold is a long wave investment. I'm not saying that we won't have pullbacks, even in the Dow. I think everyone, you're probably too young, but everyone can remember 1987 when the Dow plunged by 20%. Well, you can barely see that move on a long-term chart of the Dow. You really can't. It's a tiny blip on the Dow's way to 40,000, 45,000, what have you. And I think that there is reason to believe that gold will indeed go into the 10,000s. I didn't say this before in an interview that I gave when gold was at 1,200. And I was asked by David Rubenstein, where do you see gold going? And I said my long-term outlook from 2007 was that the first equilibrium level would be between $3,000 to $5,000. Right. I didn't venture my longer-term view because we still had to get to 3,000. But now that we have, I feel less reluctant. But the point is, if you're a gold bull, get ready for volatility, because that's just the nature of bull markets, and gold will confound you. But the long-term trajectory for gold and the implications for gold mining equities is absolutely explosive. What I do believe is that if I am right about silver, whether it goes into triple digits or not, the silver equities will go ballistic. And we have two private companies that we're planning on taking public next year, each with hundreds of millions of ounces, if not beyond that. And we see that has the potential to outpace anything in gold. So for us as investors at Electrum, our focus is on Novagold. We've had an excellent experience by selling one of our silver mining stories, Gatos Silver, to First Majestic, which has done extremely well and has great leverage. And we have two others that in the silver space that will go public. So as I said, like a true conservative, we have a lot of present happiness. But perhaps with silver equities, we'll see something utopic.
While discussing gold investment, Thomas Kaplan calls Donlin one of the most exceptional assets globally, citing its jurisdictional safety. He believes China's true gold holdings are vastly understated and may surpass U.S. reserves. As gold remonetizes, U.S.-based assets could see premium valuations. Thus, Kaplan focuses his investments solely on North American precious metal projects. Most analysts believe that central banks remain the bedrock of gold's rally, driven by the long-term diversification of reserves away from dollar dominance. China has added to its reserves for 8 months consecutively, while an ECB survey showed nearly 2/5 of central banks cite geopolitical risk as a reason to hold gold. As of 2025, Chinese private gold holdings have surpassed 31,000 tons, the largest collective private ownership globally. This extraordinary accumulation represents a transformation in global gold distribution, with significant implications for future market dynamics. Looking forward, Thomas Kaplan views this as smart, legal insider buying and expects a surge in demand from both East and West. He states that the freezing of Russia's reserves highlights gold's strategic importance and justifies repatriation. Amidst unsustainable global debt, he views gold as both a protection and the best long-term investment available. Let's get back to the interview.
I believe that is the case. To my mind, the holy grail for a precious metals investor is investing in great assets, by which Donlin qualifies enormously. In fact, if you look at that combination of size, grade, exploration potential, production profile, jurisdictional safety, mine life, and the rest, that combination of attributes is unique. Maybe the Sukhoi Log project in Russia, but you certainly wouldn't want to be on that side of the Bering Straits from a jurisdictional standpoint. But that's a fine classification. We're talking about the two biggest gold mines in development in the world. No doubt, from a national security standpoint, if you look at the strategy which has been employed by China in not only buying up all of the gold it produces, but also being the world's largest importer, I think that there is a very strong sense that the Chinese are understating their official reserves. They can do so technically by splitting them amongst SOEs or government-owned corporations, not to mention the central bank. I think that one day if they were to reveal what they have, they would certainly rival, if not significantly surpass, America's gold reserves, which are officially the world's largest. America is a beneficiary of rising gold prices. Ergo, America is a beneficiary of any remonetization of gold. And in that case, those assets that are in the United States are going to achieve premium valuations. So we are ahead of the curve on this, whether it's investing in gold or in silver. We've placed an entire emphasis on only North American assets. And of course, the United States to us is the safest jurisdiction in the world. Well, first of all, you've seen a revaluation of gold, which has essentially meant that every central banker who ever had the guts or any other anatomical parts to say, let's put money into gold, has been proven to be right. That's important. For a number of years, I've told people, watch what the central banks are doing. They are not dumb money. They are smart money. The fact that they're buying gold, or in some cases not selling their gold, when other items are on their balance sheet that essentially they've been forced to purchase for political reasons. This is insider buying in a good way, in a legal way. By central banks buying or not selling, they are saying that gold is something that we regard as being an autonomous asset class. It is by definition the only financial asset which isn't someone else's obligation to repay you. So even putting aside crypto and whatever, views one might have on that, the reality is that for the official sector, gold is the monetary instrument of choice if they're given the opportunity to buy it. And they've had positive reinforcement. So if you have the official sector on the one hand as a buyer, and I think it's extremely important that even when gold went to $3,000 an ounce, the Chinese essentially said to insurance companies, you can experiment by buying some gold. They weren't saying it's overvalued. They said at $3,000 an ounce, insurance companies can buy it. That's a huge statement. Now, if you also look at the fact that the Chinese continue to be in competition with the Indians, the world's largest consumers of gold, then you have the private sector competing with the public sector over a scarce asset. And for many, many years, I've said to people, look, if it comes down to nothing, throwaway line. Whenever the Chinese and the Indians are competing over who's going to be the largest consumer of a scarce asset, you want to own some. Now, the fact is, we look at things through a very, Western-centric point of view. But the East is already voting. The West will catch up. And then you'll likely see a speculative fever coming out of the East and taking the West along with it. As my friend John Paulson and I, like to laugh, when gold catches on and people get gold fever, it's absolutely extraordinary. And it could put, crypto in the dust in terms of people's passions and emotions. We're not there yet, but we will be. The next crisis, if the markets don't react with absolute confidence to, a chairman of the ECB or the Fed saying, hey, look, we've got this. If the market continues to go down, then it's going to get extremely ugly. So if we don't have like a Draghi moment, then I think it's going to be ugly. I mean, the reality is that I don't see a way through the accumulation of debt without either much, much stronger inflation or a deflation, which leads to a cleansing out of the financial plumbing. For anyone who's interested in what's likely to happen, I would strongly recommend that you read Ray Dalio's latest book on how countries go bankrupt. I think it should be absolutely required reading, whether you're an optimist or a pessimist. As a work of history, it's a fine example of what we call applied history. But it's also a very sobering assessment of how you should be positioning yourself. To look at the entire debt landscape globally and not conclude that it's unsustainable is a mistake. And those who've chosen, let's say, like myself, or like those who are bullish on gold, to express that concern via gold as a currency or as an asset class, are protecting themselves. Are you going to put as much of your net worth into gold or silver related assets as I am? No, and I'm not advocating it. Diversification is important. But at this point, for all the reasons, even if you don't want to be negative about the world, just for a lot of the positive factors, you want to own gold. But a lot's changed in the world since 2022. And I would strongly advise that everyone takes a position and just keeps it. And hopefully it's an insurance policy that never gets called. But otherwise, as an investment, I think it's the best one that I know.
In 2024, global central banks added enough gold to surpass the US dollar as the second leading reserve asset held. Bank of America, which notified investors in early July that gold may surpass $4,000, says a survey of global monetary authorities shows that 95% of them expect central banks to continue building gold reserves. A new HSBC survey shows wealthy investors doubling their allocation to alternative assets, with gold emerging as the standout. Gold's share jumped dramatically from 5% to 11%, the largest increase among all asset classes. Physical gold remains particularly attractive as a safe haven, with 41% of respondents planning to own it and 28% interested in digital gold. As central banks accumulate gold and silver gains momentum, are you positioned to benefit from what may be the most significant wealth transfer in the precious metals market this century? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.